Hi, are you a business owner that has high payment, merchant cash advance, or other very expensive short-term debt that is just crushing your cash flow? In this video, we outline a couple refinancing programs that we have that can take those daily or weekly payments and put them into one monthly payment and save you tens of thousands, or in some cases, hundreds of thousands of dollars per month in cash flow. Hi, I'm Mike Wright with Biz Fund First and Foresight Business Funding. If you have this problem, either watch the video or give us a call at 317-589-0118 and we'll get started on helping you. I'm going to hop in and share my screen right now and go over our two programs that we have. Merchant cash advance, refi, and a monthly payment. This is updated for 2023. And we have new refinancing options. They'll be better for some may or may not work. $100,000 minimum loan size. And if you already know you have a problem, just go to bizfundfirst.com/MCA refi, and you can get started there, or just give us a call, 317-589-0118. Okay, so in order to refinance your high rate MCA's revenue or cash flow loan into a monthly payment, we're going to show you case studies, frequently asked questions, the program overview for both programs. There's two main programs. One, you need 300,000 minimum revenue and a FICO score over 600. If you meet those requirements, this is quicker and more flexible than the other program. There's the other program, you need 1 million minimum revenue and no minimum FICO score. And just so you know, if you're below those revenues, we have other programs that can reduce your payments by 35%. You probably need 200,000 minimum revenue, we can be pretty creative. It just really depends on your business and your situation. So the first case study we're going to show you was $2,560,000 in five MCAs, and we turned that into a monthly payment, and he also got emergency cash for his business. The second case study is $230,000 in advances. That was 6 MCAs and a 1 monthly payment. So here we go on the first case study. The monthly debt service savings and increase in monthly free cash flow was $514,000. The summary: client had, 2.5 million in 5 MCAs. He was considering restructuring instead of a refinance. Restructuring is pretty much the last resort unless you're filing bankruptcy. The cash flow is crushed by the MCAs. It totaled $671,000 a month. And to top off, because of all those high payments, they needed $500,000 in cash to make payroll in 2 days. So he's basically wanted to restructure, get rid of those payments so he could hit his payroll and move on. He had a very good credit score. It was over 750, and the company was making 26 million in revenue annually. It's between $2 and $3 million a month. So it was a pretty healthy business if it wasn't for the MCAs. So as a strategy, we found them 500,000 in a new MCA so he could fund the payroll in 2 days. And that bumped up his total MCAs to $3 million plus. And just to clear that up, MCAs can be used as a tool, but once you start stacking them, it gets dangerous. So, before we went to get him a new MCA, we had a strategy that we were 98% sure that that MCA wasn't going to last very long. So to finish the strategy, we found him a $4 million new 3-year term loan and that refinanced the $3 million in MCAs, and it added $1 million in working capital to prevent the need for future MCAs. Because what, the term loan lender, who this is private funding, but on that, even on a 3-year term loan, the biggest fear is someone will go out and get more MCAs and crush the cash flow. So, we wanted to have enough money in reserve if there were emergencies. The business could tap that and that's, continue to grow, work on the business. So to finish the summary, total active merchant cash advances, there were 5 balances, after we added the 500, 3 million. So it was 2.5 million plus the 500,000 for payroll. $671,000 was the monthly payment when we met the client. The new total payment from the refinancing and the new working capital was $156,000 a month, and that saved them $515,000 a month in financing payments. The total new loan was $4 million, and that included the $1 million in working capital. Term was 36 months, amortization was 36 months, and you'll have a monthly payment. The second MCA refinancing case study was a client that had $230,000 in advances. Those were in 6 MCAs, and we refinanced that into 1 monthly payment. The debt service savings and the increase in monthly free cash flow was $34,332. So he had 6 advances, $230,000, and total merchant cash advance debt. The total monthly payments were $48,956, basically $49,000. The new payment would be $14,600. So we freed up $34,332 per month to the business. The new loan was $275,000. They received $30,000 working capital because, again, we didn't want to hiccup 2 weeks into this thing where they had to go get another term loan or another MCA. This was a 12-month term, and that would probably be renewable for 12 months. And that was on a 24-month amortization schedule. So what are the basic requirements to refinance an MCA into a term loan? So the first program, the credit has to be over 600 FICO score. You can't have any recent bankruptcies or repossessions in the last 12 months. Business must be generating at least $300,000 annually and have at least 1 current MCA. MCA buyout loans can be secured with assets, or they also can be unsecured depending on the situation. So basically, they're going to want, some form of accounts receivables. If you don't have hard assets, you have to be in business at least a year. If you request additional capital, or we think it's needed, or usually the private funder that does the term loan will say, hey, these guys need working capital. You have to have accounts receivable or contracts or some form of collateral. We can be creative, but there has to be something that gives them, peace of mind going into it. The second program, this lender wants businesses to have 1 million or more in gross revenue annually. Merchant cash advance total balance should be at least 150,000. You must have accounts receivable. There's no choice on this, or a subscription cash flow. And I'll just let you know, these guys want, cash, stock, inventories, or other real estate in order for you to qualify. More frequently asked questions. Are you lending right now? Yes, we are. We're very busy, but give us a call and we'll help you. Do you provide working capital? Yes, we provide working capital at closing in addition to the required merchant cash refinance. Of course, this is all dependent on underwriting. So you may get some, you may not. This may work or it may not. What if the business has more than one merchant cash advance? As I've already shown in the case studies, if you have, multiple MCAs, like once you get around 5 MCAs or more, these underwriters, these lenders don't necessarily like that many, especially if, they'll take defaults, but if you've defaulted on all of them and you're really dying, it may or may not be too late. So if you're in that situation, give us a call. We might be able to do a restructuring program, or there might be other ways around it. It just depends on the timing of it. Are there options available for less than 100,000 in MCAs and revenues less than $1 million, or let's say 300,000? We have other options, but it depends on several variables. We can, we have a pretty easy program, can reduce your payments by 35%, but it might not be a term loan. We use factoring, term loans, purchase order financing, things like that. We could probably even do equipment financing if the situation's right, but that's not very likely. What if your business is missed, altered, or defaulted on payments? This is the specific situation, we're here to help alleviate. The program number 2, they will typically do this, but you have to make sure, you have enough revenues and collateral. What if my business was rejected by the SBA or their bank? Our goal is to get each client the lowest cost financing possible. If you have MCAs, we may need to take a multiple step or long-term process. As I outlined that first case study, they had good credit and they had good revenue, but they had some hiccups, and once you start paying that high rate debt, it can really, hinder a business. So basically, for them, our plan was, oh shoot, we're gonna have to get you another MCA to hit payroll, and then a week or 2 weeks later, we're going to refinance that and all of it. So then, our plan is, 6 to 8 months down the line, hopefully we can either pay off that loan, or we can, be away from the MCA long enough that an SBA bank would be able to lend to them. And, if you have 620 credit and you can cover the debt service, we have SBA banks that will even refi MCA loans. And these are like true banks, some of the biggest lenders in the country. They'll refi you, but typically, if you have MCAs, you may not have time for the underwriting. They'll take 30 to 60 days. What if you have an SBA loan or, SBA disaster assistance? That's fine. We're trying to help you make all your payments. If you have accounts receivable, invoice factoring in place, that's more than okay. That we can refinance, pay off the current factoring loan as well as the merchant cash advance, roll it into a monthly payment. It just really variable. It just varies on the specific situation. So how do you get started? You call 317-589-0118, or you can go to bizfundfirst.com/schedule, or pretty much hit any page on our website and just send us a note. More questions, basically like what happens once you get started. Typically you're going to get a term loan from 12 to 60 months amortized. Some will be renewable. And then, and we take out all those MCA positions. Depending on underwriting, additional working capital, you have one payment. So, our goal is to save you 35 to 90% on your current monthly debt service. Pricing, it's not cheap, but it's definitely a lot cheaper than the MCAs. It's typically 21 to 29% fixed APR. for 12 months to 36-month to 60-month terms. You have to fill out our application and submit all requested documents to get pre-qualify. That typically takes 1 to 2 business days. And then, term sheets are issued to, businesses that qualify. And then our goal is to have you closed and funded in 5 to 12 business days. On program 2, they do an on-site, due diligence. The first program, they don't. I mean, they can if they choose to, but they usually don't. So no FICO minimum for program 2, 600 FICO for program 1. And generally you must have outstanding receivables to qualify for either one of these. They want to make sure that you're growing and not dying. If they see future growth in your company, they're more likely to take the risk. So this has been, the Merchant Cash Advance Refi and a monthly payment video. Thank you for watching. If you liked the video, if it was informative, please click like below. If you'd like more videos and more information, we typically will post a video on a new financing topic or a new financing program once a week. If you click subscribe, you'll get notified and you'll know, you can come to our channel and check out the video to see if you want to watch it or not. So just click subscribe. This has been Mike Wright with Foresight Business Funding and bizfundfirst.com. Have a great day.